The economic calendar was empty on a Monday, so investors digested Powell's speech at the annual symposium, revised their portfolios, and speculated on the corporate news. As a result, trading volume was low yesterday, and the benchmark stock indexes closed with gains. Today, the market is eager to clear up the state of affairs in the U.S. economy. The Dow Jones climbed by 0.62% yesterday, and the Nasdaq added 0.84%. The S&P500 grew by 0.63% to close at 4,433 points. The major stock indexes had a subdued pre-market. Futures on the stock indexes shed 0.02 and 0.07%. The S&P is expected to trade in the intraday corridor between 4,390 and 4,460 points. The stock market remains surprisingly optimistic despite the growing likelihood of another rate hike in the United States. For the first time since the bank crisis in March, FedFunds futures suggested that the chance of another rate hike is more than 50%. If so, the official funds rate will increase to the range of 5.75%. Amid the empty economic calendar, the market is focused on the corporate sector. Chinese stocks 3M and Goldman Sachs showed the best performance. 3M shares jumped by 5.2% after reporting that their conglomerate had tentatively agreed to pay more than $5.5 billion to settle more than 300,000 lawsuits, alleging it sold faulty combat earplugs to the U.S. military. Goldman Sachs shares added 1.8% after the lender closed a deal to sell its investment advisory business to asset management firm Creative Planning LLC. Shares of U.S.-listed Chinese companies, including JD.com, Baidu, and Alibaba, rose more than 2% after China halved the stamp duty on a stock trading from a Monday to bolster its weakening market. Nvidia shares grew by 1.78% to become the best-selling stock in the S&P500 index, with a $31 billion worth of chipmakers shares traded. Other mega-cap stocks also went up, with the Apple and Alphabet adding 0.9% each. Besides, U.S. Commerce Secretary Gina Raimondo discussed concerns about restrictions on the U.S. businesses, including Intel and Micron, with the Chinese Commerce Secretary Wang Wentao. Micron shares jumped by 2.5% and Intel shares rose by 1.1%. On a Tuesday, apart from the corporate sector, the market will also have macroeconomic drivers. That's why Wall Street indexes made hints about a sluggish opening. Investors are holding back from large bets ahead of the key economic data. Several important reports are scheduled to be released this week, including the Personal Consumption Price Index and the non-farm payrolls. The JOLTS job openings report, which comes immediately after the opening bell, is expected to show that the number of vacancies fell to 9.465 million from a 9.582 million in July, signaling easing pressure in the labor market. If the number of vacancies turns out to be weaker than expected, the market may really like it because this will indicate that the labor market is softening a little and the Fed may not be so aggressive. And traders' bets on a pause in rate hikes in September were nearly 80.5%, while bets on a rate increase of at least 25 basis points in November were nearly 49%, according to FedWatch tool. The 10-year Treasury yield remained stable at 4.215%. Shares of most growth mega-cap stocks declined, with the Tesla and Nvidia shares down 0.5% and 0.4%, respectively. Investors will also be keeping a close eye on the Consumer Confidence report. Also, the market may be influenced by the speech of Michael Barr, the deputy chairman of the Federal Reserve for Supervision. In the corporate news, Salesforce shares fell by 1.8% in the pre-market after JP Morgan removed the business software maker from the US analysts' watch list. Shares of Verizon and AT&T rose by more than 1% each after Citi upgraded the telecoms ratings to buy from a neutral. Though the market will see the first batch of important data today, it will be only a small part of the overall puzzle. Investors are likely to remain on the fence in anticipation of more significant reports at the end of the week. The US dollar is again asserting its strength in the currency market. Its index traded at 104.3 in the midday, 0.27% higher from yesterday's closing price. The instrument is likely to trade in the intraday corridor between 103.90 and 104.50. The greenback inched up on Tuesday, though traders are refraining from large bets ahead of a batch of macroeconomic reports. The US dollar has gained more than 2% this month against a basket of 6 major rivals. Its index is on a track to close with the gains for 6 weeks straight because decent economic data cemented expectations that interest rates could remain at elevated levels for a long time. That view gained even more support after Fed Chairman Jerome Powell suggested on Friday that further interest rate hikes might be needed to cool stubborn inflation, though his plans to proceed cautiously created some uncertainty. As a result, the market priced in the Fed's strategy and also took the data as the basis for sentiment and the report on the consumer spending on personal consumption, the Fed's favorite measure of inflation, will be released on Thursday. The official non-farm payrolls will be available on Friday. Until then, the dollar index may gain momentum, but not a clear trajectory. The Canadian dollar could be wound down by its firm American counterpart. The USD CAD pair traded at 1.3626 before the opening bell and 0.26% up. The intraday corridor is seen between 1.3570 and 1.3650. Brent crude traded at $84.27 a barrel, or 0.16% lower. WTI dropped by 0.3%. The crypto market is trading mainly in the red today, except Bitcoin. The token has gained 0.26% intraday and grew to 26,048. Popular altcoins have got stuck under selling pressure. Ethereum, Solana, Ripple, Cardano and Binance shed from a 0.08 to 2.4%. Cryptocurrencies have been trapped on a range-bound market. CNBC reported recently that the trading volume of Bitcoin shrank to the lowest extent in more than 4 years. The number of tokens traded on all platforms fell to the level last seen in 2019. This represents a significant decline of 94% from the March high of 3.5 million bitcoins. There are no drivers of market movement. Technical indicators are bearish, and the trading are in the wait-and-see mood. In the news, 3 Republican lawmakers have criticized the Fed for recent actions to increase oversight of banks in the cryptocurrency and stablecoin space. In a letter to Jerome Powell, lawmakers said the move undermined the efforts to pass legislation aimed at regulating stablecoins. As for the intraday outlook for Bitcoin, the asset remains in the range of $25,900 to $26,200. Going beyond the borders can later the token either to decrease to $25,600 or to grow to $26,500. We are making every effort to encourage your well-grounded trading decisions. Welcome to leave your comments and ask any questions, and see you online tomorrow.